All right, we're mixing it up a little bit. Today is Saturday, August 1st, 2020. This is all about your Benjamins and your weekly mixtape. And then we're mixing it up. We're going to be recording hopefully every Saturday, so it will be ready directly in your inbox first thing Sunday morning. A little bit of feedback. Getting the mixtape without the video until later in the day hasn't been the best experience, so we're going to mix it up for you. And while we don't have soccer, I can make it happen. So with that, let's get to the headlines that may or may not be impacting your financial plan and your portfolio. And it's going to get off to a little bit of a negative start. A few articles from the Wall Street Journal, one from CNBC. But let's start off with the first one, which is about the economy. So in the second quarter, the economy declined at a fastest rate in 70 years. We saw the gross domestic product fall 32% in the second quarter. So that's the second quarter in a row of declining GDP. So a big level. I don't think it's a huge surprise when we think about unemployment, and that also ticked up to 1.43 million people claiming unemployment. Let me double check that number real quick. Yes, I'm right. So, it's not a surprise that this is where the GDP fell to, given everything going on with COVID and the slowdown and shutting down of economies. And that ties into the next one. So the next article goes into consumer sentiment. If we see GDP falling, there's small business owners, people not going back to work, seeing this, so naturally consumer sentiment would match a number like that with a declining as well. So consumer sentiment is just how consumers are feeling, their willingness to go out and spend money. That has fallen down as well as COVID cases continue to rise across the country. So what does that all mean? We don't know, but it's just good to understand what's going on in the economy. And then also how are consumers feeling, because the consumers will be the one to bring the economy back. Consumer spending is one of the biggest components of the economy, and if consumers are not feeling secure about their future and not being willing to go out and spend money and put it back into the economy, then that may mean that GDP continues to slow as well. Hopefully what the trend will be is if it continues to decline, it will do so at a slower rate. So at least that the fall is not as fast, and then that's the way we start to get back going in the right direction. So again, not the greatest news, but as we kind of look around and see, sometimes the news and the metrics that we're seeing from the economic reports don't necessarily match up to what we're seeing. Depending on where you're at, depending on your career, employment, you may not be living a life that speaks to what those two headlines may say. So it's a huge, I've talked about this disconnect between classes and wealth in our country right now. This just shows that it's continuing to go on. So let's go visit the Fed. Our friends at the Fed met this week and decided to leave rates unchanged, which is not a surprise. So still very, very low rates. And that's mainly just because the economy hasn't gotten any better. We're still at levels worse than pre-COVID, so they're not going to be making any increases right now, keeping everything the same. So not that a lot to talk about on the Fed, but we've always talked about them whenever they come up. So I figured since they had a meeting, might as well address it and bring it to the forefront and talk about it. So with all of this, the GDP growth decline, consumer sentiment down, the Fed keeping everything as is, what do you think the market's going to be doing in a week like that? Well, if you guessed it would have a good week, you would have been right. But that may not have been what logic would tell you to guess. So the big story this week was we had Amazon, Facebook, Google, and Apple report earnings all on Thursday. All had good reports. Apple, Amazon, and Facebook having the best. Google having kind of a mixed report, but those companies' stocks all took off. So I bring that up only because I talked about earlier separation of wealth and class. We're also seeing that with companies. So while Apple and Amazon and Facebook had a tremendous quarter, did very well, we have businesses, whether they be publicly traded or small businesses, failing and struggling. So we're seeing the companies that are in good areas like technology doing very well, and we see companies like the airlines and restaurants and other companies like that struggling. So even within companies, we're seeing this separation and wonder what that separation is going to lead to and how does that separation get pulled back together. I don't have the answers, but I just wanted to point those things out. So does that mean you go run out and buy these individual companies? My beliefs, diversified portfolio, long-term, global exposure. The good thing is these companies, Apple, Amazon, Facebook, Google, are some of the largest widely held stocks that are in pretty much the majority of the large funds that are out there. So you have exposure to these companies. You don't have to worry about picking them at the right time. So as we talk about securities and not making recommendations, but positions, let's talk about gold real quick, because gold has had a tremendous run as of late. Number of reasons are cited for it: low interest rates, printing, and think of inflation coming along, doom and gloom scenarios. All of these reasons could be what's leading to gold having a good run. I want to bring it up because when stocks or commodities or investments have very good runs, you start to see people jump on them. We saw that earlier with Hertz and Robinhood traders buying up this company that had already filed for bankruptcy. We saw with cryptocurrencies back in 2017 that when things get hot, people want to jump on it. And with gold, it's a little bit different as well, because on top of the good run, you have the concern about the economy and the markets and inflation and printing. So that makes other people hop on top of it even more. I don't have a strong opinion about gold because I think gold is a hard investment. It's just as volatile as stocks. So people think that gold is a safe haven, and it can be a good inflation hedge. But if you go back and look at the chart of gold over the long term, it's just as volatile as stock, if not maybe a little bit more. And it has long runs of doing absolutely nothing, like some areas of the market do as well. So do you go out and buy a whole bunch of gold? Talk to your advisors, see where that plays in. And also, how are you going to get exposure to this? Are you buying physical gold? And what does that mean? How do you store it? Is that very liquid? Are you buying an ETF exposure? And if you go into these ETFs or these funds, make sure you understand what type of fund you're buying. What is your exposure? What are the risks to it? Because there are funds that you might think are a gold play, but maybe they are a inverse, or they have leverage on it and it's more risky than what you realize. So if you're going into these areas because you have a thesis, make sure you understand what it is that you're investing. I'm not telling you should or you shouldn't. I just bringing it up because I know as gold continues to do well, people are going to talk more and more about it, and especially when you have these headlines of recessions and depressions and all of those things, it's going to lead to gold being more of a big topic, even more so when it's doing well. And finally, the last article, really not much to talk about, but a lot of small business owners, readers of All About Your Benjamins, are tuning into these videos. And I thought the Wall Street Journal had a good collection of articles that was basically called the Small Business Survival Guide. So just wanted to put that together so you can have all these different resources, see stories of other small business owners, what's working for them, what's not working for them. I just thought it was a good piece to include. So it's not really anything to talk about as far as headlines impacting, but I thought it was a good resource and I wanted to throw that in there as well. So that is it. That is your weekend review for August 1st, but probably you're going to see it on August 2nd. Be sure to subscribe to the YouTube channel. Be sure to head over to allaboutyourbenjamins.com to see all of the great blog posts in this week's mixtape, and share with your friends. Get this going around. Let's help spread the knowledge that's out there and get people learning more about their financial planning and their personal finances and taking an interest in it. So with that, I'll let you get to your weekend. Thanks for tuning in. Again, subscribe, share, throw anything you want to in the comments. Let's get engaging in those comments and make this more fun. Thanks for watching, and we'll see you in the next episode.